Welcome back to the Blueberry Funded Trader Spotlight. This is a series that we post online in which we sit down with members of our community. We go over their history, how they got into trading, their story, and really how they've become the trader that they are today. We're very excited to be joined by Rohit, who has been working with us for a while now, who recently received quite a large payout. So welcome to the episode, Rohit.
Thanks, Marcus.
Fantastic. Well, look, I'm happy to dive straight in and really start going over all the questions we've prepared. As usual, as viewers know, I have a tendency to go on sort of tangents and go off topic. So if anytime you feel I'm doing that, feel free to bring me back and keep me grounded. And I'll try and do the same for you, so we can keep this all on track. But I guess to get started, did you want to tell us a bit about your trading journey and what originally got you into trading?
Yeah. So I started in my trading journey in 2023 with the Indian market, and I started with the future and options in the Indian market. So I joined some institute which was there near to my home, and I was like, if I do something online, it will be a waste of time. So let me join some institute offline, and I go there, and it was a complete waste of time, and it was nothing but a scam. Then I get into all these signal and all these things. I have blown a lot of money in Indian market. Then I left that institute, the trading institute. I have tried my hand in Indian market after leaving the institute for around 4 or 5 months, but I was not seeing any sort of return in the Indian market. And by the time I was doing the Indian market, I started my Instagram page as well, where I was documenting my trading journey. I started my Instagram page with a 100 days trading challenge, where I was trading futures and option in Indian market, but things were not going good. Then by December 2023, I came to know about prop firms. Then I researched a little bit, and I was like, dude, literally there's some companies out there who are asking for just $200, $300, and they're gonna give you a $50,000 or a $100,000 account. And I researched a little bit, and then I come to know that these are the company, and there are multiple company which are there in the market which will give you the funds if you show the skills. I jumped into the prop firms starting from January 2024 last year, and once I jumped into the prop firm, like any other beginner, like I was not profitable in Indian market, so there was no chance that I'll become profitable in prop firm. Once I entered into prop firm, I was continuously blowing accounts one after the another, and like I was literally on my last few bucks. Like in Indian terms, it was like 50,000 rupees which I have left with, that too in the mutual funds. I withdrawn that fund, and I have taken a time of around 7 or 8 days. Think that what exactly I am doing wrong, because of which I am continuously breaching account one after the another. So then I realized that there is this drawdown thing, there is this daily drawdown thing, and majority of the time I was breaching the account because of daily drawdown. And like the mistake which I am doing in the Indian market, that is lack of discipline, lack of emotion control. I am doing the same thing, because of which I was breaching the account. And then I realized one more thing, that like majority, like 99% of the content the content on social media, on YouTube, on Instagram now changed. But if we see that the content last year was not there was not a lot of content related to prop firms, and majority of the people who were making content about the prop firm, they were saying the same thing: risk 0.5%. Once you go up 1 or 2%, start risking 1%. If you go down in a drawdown of 1 or 2%, start risking less. And I was doing the same thing, was like any other person. When I entered into prop firm, I was watching videos on Instagram and on YouTube, and I was doing the same thing. And when I lost all my money, and when I withdraw the last few bucks from the mutual funds, and when I get a break of 7 or 8 days, in that particular time I realized this thing, that after watching all these videos, I have made my mind that I'll risk 0.5%, and once I go up I'll risk 2%, but this particular thing is not taking me anywhere. Then I sit down again and I watched all the videos again, and what I find is that that these people are not the majority of these people are not the real trader. They have just copied content from one person to other. And like, if you see the videos of the people who are making content on YouTube and on Instagram last year, majority of the content which they were posting was very similar to one another. It's just that if someone is saying one line on at 1 minute, this other person is saying that same line on 5 minutes 20 seconds. That's it. Like, every single person was saying the same thing, 0.5%, and then once you go up, you risk 1%. But once I get the time, once I take a break of 7 or 8 days and withdraw my last few bucks from mutual fund, I analyzed that this thing is the main issue because of which I am breaching the account. Like, I was risking 0.5%, and slowly and steadily I'll go up 1 or 2%. Then after few days I lost all the control, and in order to pass the account, because if you risk 0.5%, you'll go up 1% or 2%, then you'll come again on break even, then you go in drawdown, then you again come on break even, and one day you lost all your control and you directly risk 4% and you breach the account. So then I planned this thing that now let's do one thing. Now let's risk 2.5, 3% or 3.5%. Try to pass the account as soon as possible by risking 3%, 3.5%, taking 1:1 or 1:2, so that I can pass the account in 1 or max 2 trades. And if in case account goes in drawdown, it'll directly go in 3% drawdown, then still have left with around 6 or 7% in the account. And then the next day I can trade so that I can not be daily drawdown limit. So then I changed my approach of risking more, like 3%, 3.5% in my challenge account. And after that, I start seeing some of the results. And once I get funded, like finally after 3 months of struggle, I get funded with a $10,000 account. And the day I get funded, the very next day, I got an email that TFT is shut down and they have closed their business. Like, after a struggle of 3 months and doing all these things, finally I got funded, but the company went down. And then I finally realized that, first of all, you have to go for multiple prop firm. And the second thing is, now I realize that this particular approach of risking more is working in prop firm, so I'll do the same thing. Then slowly and steadily I'll follow that approach of risking 2.5, 3.5% in challenge phase, and I'll get funded. And from there on, from $10,000 account, I go up to 25,000, then to 50,000, then to 100,000. And then in the last 4 months of 2024, I took a challenge where I said this thing that I'll go for 1.5 million funding before 2024 end, and I achieved that goal as well of 1.5 million funding. And from there, things are going great. The last year goal was to get maximum funding, but this year goal is to get maximum number of payout, and things are going good as of now. And let's see. So we still have 8 months left.
Yeah, I know. There's so much to unpack in everything you've said, and I love it. I mean, I think it's interesting in a way that what you say about educators or people out there online, because obviously, look, it's no secret. There's a lot of smokes and mirrors, a lot of fake players in, trading in general and Forex, and especially in the prop space. And
yes,
I find it an interesting story that what you did was go against conventional wisdom. And it's an interesting point because you realize that a lot of content creators in this industry, they all say the same thing. You're right.
Yeah,
and in a way, they do it because they know it works. They know if this guy's gotten 10,000 views off saying this, I'll say the same thing in a different way or targeting a different group of people, and it will work. But they don't risk anything by saying that. I mean, this happened a lot with, SMC, smart money concepts, and like ICT sort of strategies. Obviously there's a big community of those people, but you just saw every influencer, every content creator, everyone jump on the same trend. And it's tough because that makes everyone believe in those strategies a lot more. And the funny thing is in markets, and I always believe this, is the more people do something, the more larger groups of people pile into strategies, the less they work, because in theory, there is price impact. There is a real market out there. And it's really important. And so it's something you never really get taught. And now I'm not saying I necessarily condone risking more if that's something that I personally believe in. But the fact that I think that it's worked for you, and it was about going against everyone saying this one thing, I'm going to do the opposite, and about taking that risk. And that is a risk in itself. I think is very, that's really interesting, and it's something I think traders or people listening should be aware of, is like it becomes a bit of a, not self-fulfilling prophecy, but I think when you hear so many people talk about the same thing that's going to make money, you're like, well, if everyone's talking about it, it must work, when it's actually sort of conversely, the inverse of that is true a lot of the time.
And that is exactly what happened. Like I along with this thing, I understand one more thing, that these people are, as you said, these people are saying all these things, SMC, ICT and all these things. I had never even I have not even watched a single video of SMC or ICT on social media, or I've never learned about SMC or ICT from a single person. Whatever I am doing, it's a pure price action, simple basic market structure, support, resistance, supply, demand, and nothing else. Because after making a lot of mistake and after losing a lot of money in Indian market, then coming to Forex and then breaching account one after the another, I realized this thing, that it is not the strategy, but it is the discipline. It is your ability to control your mind, and it's how you control your emotions, that what exactly make you a profitable trader. You can be a profitable trader with a 1:1 risk reward, and you can be a loss making trader with the 1:10 risk reward as well. So what exactly matters is the discipline, the emotion control, and your mental capability to control yourself, and to not get very greedy, or to not get very fearful.
Well, it's interesting because I think we've gone over, again, I think this is when these conversations are great, when we cover half of our questions without having to really say them. We've covered a lot of ground on some of those points, but I guess speaking on risk, because great point, I think it's that there's no silver bullet. There's no one size fits all. Like, the only thing I always say is, take your time and be patient. Patience is the one sort of, dogmatic thing I might say, about trading. But apart from that, there's no silver bullet. Markets are dynamic, markets are volatile. Your strategy and how you work alongside markets should also be dynamic and not static, and be ever changing in that sense. So I think it's a good point, because you always hear, the secret to prop trading is just this risk reward, that risk reward. And look, there is some data that backs it, and we go over this in our monthly AMAs. Like, we see lower risk, much lower risk reward ratios, giving more success. But as I always say to people, that's only with the data we have and in this month and this kind of market on these instruments. It's not like a silver bullet going to be the same for all time. And that's what people need to remember, is this prop industry, really, it's only taken off in the last 3-4 years. And, whilst 3 or 4 years for, a lot of young people and people out there doing prop trading, it seems like a long time to see all the different market fluctuations. It is like a small snapshot of what happens over in the long term. And I think, this industry, I always say, hasn't seen like a Swiss National Bank decision or something like that. And very similarly, I think that, the way that people trade right now that may work for a lot of prop traders can change month to month. So you're, in my opinion, completely right. It's, it's not about whether you trade with, risking 0.5% or 5%. It's how you react to the market and how you manage your risk and psychology even around that in the moment, or in so much as how the market is operating at the time. But just to sort of hone in on that. So, because obviously you're saying things like, risking 3.5% a trade and things like that. Now that goes against the grain of most conventional wisdom in the prop space.
Once I get funded, I'll start risking 0.51 or 1.5%. So what I do is like I don't copy trade. If I have $1 million funding and I have 10 account of $100,000, if I copy trade in every single account as risk 0.5%, in the end it's $5,000 which I am risking. So what I do is, instead of copying trade in the multiple account, I trade one account at a time, and I'll risk 1.5 or max 2%. Especially in the funded phase, I risk max 2%, and in challenge phase I risk more, and once I get funded I risk less. But yeah, instead of copying the trade in multiple account and risking 0.5% in every single account, what I'll do is I trade one account at a time, and I risk more in that particular account. Because if I am risking 2% in one single account, that is $2,000. But if I am risking 0.5% in 10 different accounts, that is $5,000 which I am risking in a one single trade. So I prefer risking 2% in one account than 0.5% in all my 10 accounts.
And that's a good way to put it, because I think often when we look at, we always look at it on a per account, on an overall basis, like, well, I'm only risking 0.5%. But And it's always in percentage. As long as when you put it in dollar terms, especially when you're doing a copy trading strategy, that's a good point. But I think you're also highlighting a very good thing there, which, whilst we allow copy trading between one user's accounts, you can do the same strategy on multiple accounts, which is a great benefit to the trader. It's something traders should be wary of when it comes to copy trading, because like I said before, the more you do something, the more a lot of people do a strategy in the market, the less effective that is. And the reason for that is, even if you are trading on simulated conditions at the prop firm, they are simulated to mimic the live market as much as possible. So if I'm taking out, 100 ounces of gold from the market, that's 100 ounces of gold at that price that in theory no one else can get. Even in simulated conditions, there is a depth of market, volume weighted average price that you get filled out. And so if you're copying, on the same prop firm, multiple accounts, or even many prop firms, because a lot of prop firms do plug and play out of the box pricing, which differs to us. We plug into tier one liquidity via Blueberry Markets. But in a way, the more that you're sort of trading the same strategy, the less effective it is. As each account who's trading at the same time, whoever comes in that 1 millisecond later to place that trade, in theory does get a worse fill on that trade, using normal market or order book mechanics, you could say. Now, a lot of prop firms out there, they're not providing real world like conditions, so who knows what's really happening. But it's an important point to make that when you are doing copy trading between accounts, don't just look at it as, I'm only risking 0.5% or it's the same across all of them, because you have to look at it in totality, or like you're saying, have to look at it in a way in which the dollars that you're actually risking of the total capital, because it is 0.5%, but in a way it's, I could do 0.5% across a million, or I could do a higher amount on one account. It's actually the same, dollar amount being risked. And I think we look at things so much because of, again, the content that's out there, people saying, it's, only risk 0.5% or only risk that. We need to take a step back as traders and look at the dollar amount. And it seems like common sense, but as I always say, I think when you're get addicted to some strategies or doing things a certain way, common sense, sometimes, it takes the back seat to an extent.
Right.
But I guess moving into sort of some of the other questions we have. So I guess I'm not sure where you're sort of at in your overall trading journey, but what's your typical trading routine look like on a given day?
I majorly trade Asian session, because when I enter into this forex industry, whatever I have heard from the social media, it's like that majority of the movement comes in this NY session. What from the last 6 or 7 months, what I have analyzed, that the Asian peoples are trading gold a lot, and there is a huge movement which are coming on daily basis in gold during Asian time, which is basically 3:30 a.m. Indian Standard Time to around 11:30 a.m. Indian Standard Time. So I trade in Asian session. Then majority of the time I do all my other stuff, like going out, going to gym and all these things too during this London session. And I look again at the market in NY session. So I'll plan for 1 or 2 trades in Asian session and then 1 or 2 trades in NY session. And during London session, I usually don't trade my accounts, because my strategy works well in Asian and Asian and NY session. So I completely avoid London session, and majority of the time I'll go out and do all the other stuff, going to gym and all these things.
Let's pause here for a moment. Just as we wanted to thank you for taking the time to watch this podcast, we're going to be giving one lucky winner a 25k 2-step account. In order to enter, please put a comment below with your favorite part of the interview and subscribe to the channel. Now let's get back to the podcast. Thank you for watching.
Okay, so you have a structure of the sessions that you like to trade, which is good. Obviously having that routine, and again, not just for the trading itself or a specific session with certain liquidity, as valuable as that is, but also for your own peace of mind and structure is really important, because the market's already chaotic enough as it is. So having some routine around them as much as you can, I always think is really important. So it's definitely great to hear that. I guess so you've been, as much as you've recently been posting about this very large payout you got with us, which is amazing. You've been an advocate, or you've done some content around Blueberry Funded, for a while now, which we're very grateful for. It's been really amazing to work with you. And I always say to people that India's become pretty much one of our biggest regions in the world. And it's just been through this great community of creators and everyone in it. It's one I always sort of not joke to people. We turned the website on when we pre-launched Blueberry Funded, and like from the first day, our number one country in traffic was India. And I mean, we weren't doing a lot of marketing there or anything. There's just this like vibrant, growing community of traders that just keeps getting bigger and more engaged, thanks to, I think, a lot of creators like yourself. But I guess like to bring it back to sort of the advocacy for us, so why did you originally choose, Blueberry Funded, or what about it is like, I guess, appealed to you in terms of being a prop firm? I mean, I know you said you had some ups and downs with other firms out there. So I think it'd be interesting to sort of maybe talk through your experience with firms that's, now led you, to us.
Like, first of all, it's a broker backed firm. That is one of the most important thing. Then the second thing is that there is no 3% rule, especially in the challenge phase. So as per my strategy, I can risk more in challenge phase and get funded as soon as possible. And like I was also testing Blueberry Funding, and once I get my payout, I was like this prop firm is really good, because I get my first payout of $3,624 something, and I got that payout in 4 hours. Then after that particular payout, I was like let me go all into this particular prop firm. And then like every time, like I have lost a lot of payout when I made around 6, 7 or 8%. So many prop firms rejected my payout. So I've learned this lesson that first time any requested payout from any particular prop firm, just go for 2 or 3% max. Let's see, but the payout speed of that prop firm, and how after the payout approval, how long they are taking to deposit the funds in your Rise account or in your crypto wallet. And after seeing all these things, like I get my payout approved in around 2 or 3 are my first payout, and then I got my fund in my Rise account in around from the requesting time to getting the fund in my Rise account, it's around 4 or 5 hours. So once I get a clarity that this prop firm is giving a payout at a very high speed, so then the next time I risked more, and I planned to make more. And the second time I made around 8%. I have gone up to 10%. So my payout was supposed to be 8,000, but then on the payout request date, I made 2 losses, and my account balance come down to 8,000. Then I request the payout, and the second payout as well, I got that in 4 or 5 hours. So now, once I tested it on myself that the prop firm is great, there are 1 or 2 rules which, if I can tell, they are tough, but I have seen that the prop firm is giving payout if you follow the rules, and every single thing is going great. So now I am planning to get max funded as well. So the $100,000 account with which I have withdrawn $10,000 in this April month only. Unfortunately, I breached the account, but I got $200,000 account to get max allocated in Blueberry Funding, and we still have around 8 months left. So my aim is to withdraw by the end of this year at least $100,000 from Blueberry Funded. $10,000 I have already withdrawn, so we have left with around $90,000. Let's see how it goes in next 8 months. Currently, this
8 months, 90,000. I think it's possible. I mean, I think based on how you've gone, and what I love about everything you've said, Rahid, is that you're very honest about losses or breaching accounts or things like that. It's so common for content creators to just the ones you probably talked about that you saw when you started trading, saying, here are all my payout certificates, I'm great at everything, do the always trade like this and you'll get payouts. And I think it's really interesting because, like, as always, it's sort of the age old adage, you only, losses teach you a lot more than what you win in this industry. And I think I love sort of the transparency for that, because I think that provides a lot of value to traders ultimately. But yeah, look, I mean, you've highlighted some great things, and we're quite transparent about it. We do have some tough rules. Trading's hard, and we think the rules and the evaluation have to reflect that. But ultimately, that's what's going to make people a better trader over time, which is why we're tough on traders, because trading is tough, and the market is a cruel master a lot of the time. But if all the rules are abided by and there's no issues, you get paid out quickly. Like, we don't have any issues with it, and it's all in the name of educating and building stronger traders over the long term. But I think on that, given those rules and your experience, you've gotten some payouts, you've lost some trades, lost some accounts, you've seen the whole experience. I mean, what advice would you give to traders looking to specifically pass our challenges or get a payout with Blueberry Funded?
that's the same advice which I am giving from last 1 month, and after blowing multiple account which I have analyzed on myself, that if when you are in a challenge phase, risk more. There is no point of wasting your 2, 3, 4 months by risking 0.5%, because in the end you'll risk 0.5%, you'll go up 1 or 2%, then you go down in a drawdown of 1 or 2%, then you come back again to break even, and then after 2 or 3 weeks a day come and you will be frustrated when you lose your discipline, you lose your control, and you're gonna risk 4 or 5%, then you're gonna breach your account. So it's better to risk. If you're not able to risk 3 or 4%, it's better to risk at least 1.5 or 2% and try to get funded as soon as possible. And once you get funded, then start risking 0.5%, because that is the place where you're gonna make the real money. So if you start in the January, for example, and you were trading with the 0.5 lot, and it's April end. So in the starting 4 months, you have not made a single penny. So what is the point of trading? And you are saying you're a great trader with a 70-80% win rate with a risk reward of 1:4, 1:5, and you're not making a single penny. It's better to risk more, get funded, and once you get funded, then start risking 0.5 or 1%, so that you're gonna get the payout, and you're gonna get the feel of real money in your wallet that you can withdraw, and with that you can change your lifestyle, or with that you can leave your job, or with that you can fulfill your dreams. Even if the payout is like $300, $400, $500, that's completely fine. It doesn't matter you are getting a $500 payout on a $100,000 account. What matters is that you are getting the real money. In a challenge phase, you're not getting anything. You are just making money, and there's no point of feeling like you're capturing 1:10, or you have a win rate of 80%, when in the end, when you close your day, you don't have a single penny in your wallet. So my advice will be this only, that risk more. Once you get funded, then start risking less, withdraw the payout and once you withdraw the payout, reinvest the 50% of the amount, or use the 50% of the amount to improve your lifestyle, and the remaining 50% of the amount you can put in the live account as well. Remaining 50% of the amount, from remaining 50%, the 50% amount you can put in the live account, and 50% amount you can invest again in the prop firm to increase your funding, because there is no point of aiming to get because there is no point of aiming for a 10%, 20%, 30% return. It's better to aim for more and more capital than to get only 1%, because on a $100,000 account, 10% is $10,000, and on a $1 million account, 1% is also $10,000. And it is very easy to make 1% on a $1 million account than to make 10% on a $100,000 account.
See, this is interesting, right? Because look, I won't lie, this is very against the grain thinking. And I mean, even from our perspective, we always encourage people to, trade, the same strategies or consistently across all phases. So that's our perspective. But that being said, we do recognize that there is method in the madness sometimes to how things can operate. And I think that's with this, because I think, you raise a very against the grain sort of way of thinking about challenges. But ultimately, what I think is important is you are highlighting that traders need to focus on the real money. It's not necessarily P&L, because we've got to remember that most prop firm P&L, profit loss and account is all simulated. Really, it's the sort of the performance fee, the reward that you get at the end in the form of payout, that's the thing to really focus on. And you highlight another good thing, which is about how you use that money afterwards, because you got to remember it's an ongoing investment. You don't just get the payout and go elsewhere, or I'm sure you can spend it and enjoy it, but it's about reinvesting that as well, because ultimately there is always a chance of you're going to breach a challenge and you need a backup, or you need another challenge. Now look, obviously we're a bit biased here, of course. We're gonna love people using their payouts to buy more challenges with us, so just full disclosing that. But even if it's buying challenges at different firms to test different things out, or depositing it in a broker, or investing it elsewhere, as long as, I think it's an important thing to have an ongoing commitment to trading, investment, and that form of success, rather than just spending all of it. And I mean, again, it seems like common sense, but I think when we're in an industry where most content creators are posting penthouses and Lamborghinis, people talking about wisely spending the payout money isn't something people talk about enough. Again, it sort of goes into the world of personal finance, which is a bit out of our realm sometimes, but I think it's important to know that trading's obviously an ongoing commitment, and there's always a chance of a market event you might blow or breach an account. And I think using payout money to sort of stay in the market, whether it's challenges, broker accounts, or other things outside of the CFD world, is a really important thing.
Like for all these influencers, these Lambo and these Ferraris are not liability. These are the asset, because by showing these Lambos and Ferrari, they're gonna get more people who enroll in their mentorship or who enroll in their courses. So people have to understand this thing, that they are on social media and they are selling you something. So for them, it is not the liability, it is the asset for them. Like if I am on social media and if I buy a Lambo, and if I'm gonna show a Lambo, then in the end I'm gonna sell you something, and by selling you something I'm gonna get something, and with that particular thing I'm gonna pay for Lambo. So for me it's an asset, but for you it's not an asset. It gonna be a liability for you. And people have to understand this thing, that what people are showing you on social media, it's just to get your attention so that you can enroll into their courses or you can enroll into their mentorship, and your fees of courses and mentorship is with which they get the Lambos and Ferrari.
Yeah, that's an important thing to note. It's important to remember is that where the money to buy or lease these nice things are coming from for a lot of people. So my final question is, what is, and I think you've already highlighted this a bit because you're on a very long journey of funding capital, max allocation, which I think is really exciting. But so, what is your goal in trading, and where do you see yourself in 5 years from now?
So definitely after some time, like if you have talked to so many traders, then majority of the traders say this thing, that after I'll reach to $1 million or $2 million, I'll stop doing trading and I just start focusing on other business, or I'll go somewhere and I'll just focus on investment. So I genuinely love trading, and I'm like that. Even after making $5 or $10 million in next 5 years, I'll be trading. There will be multiple business which I'll enter into. There will be investments which I'm gonna do, but the trading will kept on going. And for the next 5 years, as you asked, the goal is to take more and more number of payout and to be one of the top creators, particularly from India, who has got the maximum number of payout and the highest number of payout. So I feel that I'm gonna achieve that goal in next 1 or 2 years. And so the next few year goal is that trading will not stop. I'm gonna start businesses as well. I'm already planning for 1 or 2 business for which I'm gonna go to Dubai as well, and I'm gonna put my money, all the payout money, which the 50% I'm investing in other assets as well. So next few years will look like this: businesses, investments, but trading will kept on going. And yeah, the goal is to be one of the best, particularly in India, and then I'll aim higher to be in Asia region, then in the world, definitely.
This is amazing, and I definitely want to see you sort of reach this goal and get the max allocation with us, and keep working towards it. And I think we'd be excited to have you on this this interview series a lot more often to check in on this, because I love how you set this goal for over a year and there's sort of a plan for after that, because that's the important thing, is to always have a plan. It's not just looking planning for the next payout and then the one after it. I think what's great about how you operate is you're looking at different angles, reinvesting the money from payouts into other challenges or live capital or other assets. Having this game plan for your allocation for over a year. You're looking at it from a lot of different angles outside just the trading. But nevertheless, I think you've touched on a really great thing, because I know a lot of people, they say the same thing: I'm just going to earn all this money, then I'm done with trading, I'll go relax or do this or do that. And ironically, more often than not, they always come back to it, because the thing that, I always sort of joke, I think it's like money made trading, feels twice as good as money made working or doing other things, because
Right.
it is such it is, like I said, trading is hard. Our rules, how we operate as a prop firm, definitely reflect that. We're not trying to sugarcoat it, but because it's so hard, the rewards, essentially only go to the few in this space. And so I've met people that made a lot of money trading, a lot of money, in the trading business. They might go do other businesses, try other things, travel. They come back to it because ultimately, like, there is something. The calling of trading, I think, is just this lifelong pursuit that even if you want to get away from it, it's sometimes hard to, because nothing feels like it, or I think it's rewarding in a very different way in addition to just the money. Again, that's just my take on it, but I've sort of always seen that sort of that part of it.
Same. My take is very same. I'm not going to leave trading at all. Like, even I said the same thing. Like, majority of the people say that after earning 2 million, 5 million, 10 million, they're going to leave trading and they're going to put their money in some investment, or they're gonna go to Bali and they just chill. But my goal is very different. Like, in terms of money, like the goal is very high. But like, even after earning 2, 5 or 10 million, I'm not gonna stop trading at all. Maybe I'll reduce the amount which I'm gonna risk on trading, but the trading is something which I'm gonna do for next 20, 25, 30 years.
Yeah, because at the end of the day, you can go. You don't get a lot of enjoyment out of passive. Investing. As great as it's amazing to have passive income, but you're not actively doing it. And it's great to sit on a beach in Bali, but you can only do that so many days or for so much time before you want to feel engaged in something. And trading is a very engaging thing, depending on how you do it. So I completely agree with that. We see eye to eye on that. Look, it's been great having you. Having you on for the Trader Spotlight, Rohit. And I'm really looking forward to having you on again, hopefully periodically over the rest of the year, to check in on your journey. Yeah. Was there any sort of final thoughts that you wanted to leave for the traders viewing?
I think I have touched on almost all the points which are there in my mind. So from my end, I have shared almost everything.
Fantastic. No, quite succinct, and I think it's good to get that. Get a whole trader's journey, ethos, and mindset out of a 30-minute session. So hopefully people viewing have gotten a lot out of this. But it's been great to speak, Rohit. Until next time, it's been good talking.
Thanks, Marcus.